Gold edging a bit lower this morning amid its recent record tear, up about 60% year to date. So how should investors think about adding gold to their portfolios in the midst of market volatility? Here with me is Lawrence Sprung, founder of Mitlin Financial and author of Financial Planning Made Personal, for this week's FA Corner, brought to you by Capital Group. So, Larry, even though we're seeing gold pull back a bit, it's been consistently at record highs over and over again. When it comes to folks that are looking to add gold to their portfolio, how should they approach that? And is it just strictly a hedge, or is there something more strategic there no matter what market environment you're in?
Yeah, so I would say that it would have been great if they added it before it was up 60% probably and looking at it. But that's the thing. You want to create portfolios that are going to withstand long market cycles. So if you miss the game and you're looking to get into gold, there are a number of different ways to get in there. For retirement accounts, we talk about maybe more ETFs and mutual funds because they're easier to enter, less compliance. Outside, you could certainly buy physical gold, but at the same time, you have to be concerned about insuring the gold and physically storing it. There are other challenges there, but it's a place to enter, but enter cautiously. You're entering at a huge upside right now, so just be careful about that.
Yeah, I guess that's a question I had too. Is there a point in time where maybe it becomes a little too expensive to add gold to your portfolio?
Yeah, I think you have to be leery and go in cautiously for things that are up 60% in a given year. And if you look the past 3 years, we've had consistent double-digit growth, not as much as we've had this year. So you have to say, am I getting in at the right time? And maybe just enter with a partial position in terms of, if you're looking to add 1, 2, 3, 4, 5%, add a portion of that to your portfolio now, and then maybe look for a pullback. And if that happens, maybe use that as an opportunity to buy more.
And how should you approach adding gold to your just pure play investment portfolio as opposed to some of those retirement accounts that you were mentioning?
Yeah, so I think in your regular accounts, you can look at the ETFs and the mutual funds similarly. I think those are a lot easier for most investors to enter. You can, like I said, buy physical gold, but then you have to worry about storing it. You have to worry about insuring it. There might be other costs associated with it that you may not be aware of as you purchase those things.
And we've talked a lot about how gold's recent run-up has been due to the dollar coming down. How should folks be looking at maybe currency swings or other things happening in the market to reflect how their gold will perform?
I think gold really at its core is a hedge, right? It's a hedge against the dollar. It's also a hedge against currency concerns. It's also a hedge against political uncertainty. So there are a lot of these things. I don't know that it's just the dollar. I think there's a number of factors that people are feeling uncomfortable about that are driving the gold prices higher. If that continues, will that continue? Who knows? We'll see. But it's not a bad thing to have a 1 to 5% allocation to gold as part of your overall portfolio and strategy.
And what about other precious metals like silver, for example? That's been at record highs. What are the ways to get into silver? Is it similar to gold with ETFs?
Yeah, similarly, you can buy the physical, but you still have those same challenges that we mentioned with gold. But there are also other avenues to enter through ETFs and mutual funds. There are some that are just precious metal ETFs and mutual funds that really go into a broad band of different metals and not just gold.
And when you're looking for specific ETFs, is there a process that you should take as an investor to make sure you're getting the best ETF for you?
Yeah, I think that's
all the same?
They're very similar. You have to really understand what the underlying investments are because they do have by prospectus and by mandate, they can go in some different areas depending upon what that write-up looks like. So understand and know what you're buying within the ETF. And then secondarily, look at the expenses associated with it because at the end of the day, it's not what you make, it's what you keep, and you have to factor in the expenses and taxes into that equation.
And how does your positioning change depending on your age, your life cycle, whether you're a young person or someone that's about to retire? Should you be more exposed to gold if you're older?
Yeah, I don't know that it really swings that widely for young and old because it's more of a hedge than, it's not something that's producing an income stream, right? When you start thinking about shifting portfolios like you're mentioning, you're talking about going younger, and as you get older, maybe you want some more stability, more income.
Right,
Gold
less risk.
Gold doesn't produce the income income stream,
Right.
but it does mitigate a lot of the volatility. So, if you start out with a 5% position when you're younger and edge that up when you're older, that might make sense. But I think always getting that professional advice on what makes the most sense for you, if you don't have a good handle on it, is always a key factor.
Yeah, and gold is obviously one precious metal we're continuing to watch amid these record highs. But Larry, thank you so much. Appreciate you joining us in studio today.